I'm not smart enough, Julia. I really am not. I'm a credit guy.
Hmm.
Uh, my discipline is if I loan money, getting paid back. And I have to say, my credit assumptions in the near term suggested in my heart of hearts, I believe in the US we're in a recession. If you look at the oil and gas price before the hostilities between Israel and Iran, they were below 60. And they were below 60 with flat to declining oil production. When the oil price goes down on reduced production, it means that consumption is soft. And that is a real leading indicator of recession. We still generate a lot of jobs in this economy. And ironically, the higher end jobs are going begging, which is to say, we're short of really skilled workers. But there's a lot of people in the US who 60% of the population is living paycheck to paycheck. And that's not a prescription for a strong economy. So my operating assumption is that the economy is soft and that as normal interest rates rise, the economy gets softer. It's very worthwhile noting that despite the efforts of the Trump administration, both parties in Congress, and the head of the Fed to talk down near-term interest rates, long-term interest rates keep rising, which is to say the bond vigilantes
They're
who laughed
back.
their ugly heads during the Clinton administration have returned to the market. People are demanding more compensation for their savings, and a higher cost of capital is hard on a liquidity-driven economy. So my operating thesis is that our economy continues soft and perhaps gets softer. The institutional bias of the Fed is for higher interest rates. The employees of the Fed, the ones I know at least, and that's not a representative sample, but the ones I know, believe that the Fed is the last wall uh, against the destruction of the US dollar. But the Fed is very politicized, and the political class wants lower interest rates. The right thing to do would be to get out of the way, let the market set interest rates. But it's likely if the economy continues to deteriorate that there will be bipartisan support for cutting the interest rate and the Fed won't be able to resist. If that happens, watch the gold price. Cut an interest rate means that they've decided not to defend the dollar. If they decide not to defend the dollar, uh,
Gold's going to go up.
there we go. I remember again in the decade of the 70s, in 1975, inflation became a real concern, and the Fed and Congress decided to raise interest rates. That interest rate rise in 1975 cratered the gold price. Gold had risen, you won't remember because you weren't alive, but it had risen from $35 an ounce to a high of $200 an ounce, the end of 1974. When the interest rates were forced up, or rather allowed to go up, the price of gold fell by 50% from $200 to $100. But that wasn't the only thing that cratered as a consequence of interest rates. The U.S. housing market cratered. The U.S. Treasury market got obliterated. And the consequence of that is that the equity markets were hit hard too. Congress and the Fed lost their nerve. And in the latter part, last quarter of the decade of the year 1975, when the interest rate got forced down aggressively, the gold price went bananas. It just went berserk. It was clear to Wall Street and clear to the savers that the political class had decided to abandon the US dollar in favor of near-term liquidity in the market. And people who were shaken out of gold in that move from 200 to 100 missed a 5-year move from a low of 100 to a high of 850. All of which goes to say, if they cut the interest rate even marginally, never mind aggressively, I think, will see the gold market go in earnest. In my experience, and I'm not a silver expert, although I've studied it for 50 years, in my experience, silver is a later market mover. Precious metals bull markets are led by gold. Then they're led by the high quality gold stocks. That's the phase of the market that we're in right now. Leadership has gone from gold to the biggest and the best gold equities. About midway through a gold bull market, when the price momentum in gold has made the precious metals narrative interesting to the generalist investor, and the generalist investor comes into the precious metals market, silver outruns gold. Perhaps because of its lower unit price, I don't know. When silver catches a bid, you won't need me to tell you that leadership has changed. Those moves are really dramatic, really, truly dramatic. I've been through 3 silver bull markets. The decade of the 70s, when the silver price went from $1.15 or $1.20 to 50. The move in the early part of the decade of the 90s, when the silver price went from $4 to 50. A move in the 2000 to 2010 market where the silver price went from 5 or 6 to 50. Those are dramatic moves, tenfold moves. And I'm not suggesting that silver is going to go tenfold this time, but I am suggesting that if the gold market continues, and I believe the gold market is going to continue, at some point in time, you'll see the generalist investor come down to the space and you'll see silver explode. And let me tell you something about the coiled spring nature of this market. I've given you the arithmetic around debt and deficits and why they have to devalue the dollar. Let me give you a different piece of arithmetic. According to JP Chase, and these numbers are a year old, the market share of precious metals relative to other asset classes in the U.S. market is 0.5%, which is to say, the total value of Americans' holdings in precious metals and precious metals securities are 0.5% of their total savings and investment assets. The 4-decade mean is 2%. If the market share of precious metals relative to other asset classes were merely to revert to mean, demand for the stuff grows 4-fold. JP Chase doesn't have statistics, but they estimate that the market share of precious metals and precious metals related securities in 1981, the previous high, was 6%. Let's throw that out as an outlier. Let's just suggest that the market share of precious metals reverted to mean, and their market share went from 0.5% to 2%. A 4-fold increase in demand does a truly odd thing to price because you can't increase supplies fast enough. If you have a 5-year outlook, uranium's just a no-brainer. It's a total no-brainer. It's even politically acceptable now. When you were, as you put it, a young up-and-comer, the political class and the social class was hostile to uranium. It was the stuff of Hiroshima, Nagasaki, 3 Mile Island, stuff like that. Now, the same morons that vilified me want to subsidize me. The Inflation Reduction Act suggested that these guys should give me a bunch of taxpayer money. How weird is that? But it's like there's wind in my sails that used to be in my front. At the same time that the political acceptance of uranium has undergone a sea change, the underlying arithmetic is spectacular. There's 1 billion people on Earth, Julia, 1 billion people on Earth that have no access to primary electricity. They want to live like you and I live. Mm-hmm. That requires an energy-dense life. We've done a great job over the last 40 years lifting up the poorest of the poor. We've got another 20 or 25 years to finish the job. At the same time, you and I want to live better lives, and that requires more electricity. Data centers, electric cars, all those types of things. So we need more of all forms of energy. The best source of non-carbon generating baseload power is nuclear. The best. We're building nuclear plants like mad. We have a supply deficit now. The obstacles, the political and social obstacles to producing more capacity are reducing every single day. Now, I'm not saying this is going to be stair steps to heaven. I'm not suggesting that the spot price of uranium couldn't fall by $5 or $6 or something like that. But the truth is we're using a lot more of it than we're producing, and the supply deficit grows every month. 5 years out, 6 years out, this is an absolute no-brainer investment theme. Just today, my former employer, Sprott Inc., announced a $100 million bought deal to buy physical uranium in their Sprott Physical Uranium Trust product. Demand was so brisk that after 33 minutes, they upsized the offering to $200 million. And I think they'll probably have to upsize it again. There is incredible interest in uranium, and there is incredible fundamentals for uranium.